All right. Welcome, everyone. Welcome to today's session. Apologize, I was a bit late, but just working on with the private client of mine. Today, I'm so excited. Why am I so excited? Because these markets are setting up. Right now, guys, what we are seeing is the greatest gift we have seen probably in the last 10 years or more. And I want to walk you through everything, the reason why I'm so excited today. And so that's what I want to share with you right now with what's going on in the markets and what's going to happen moving forward. Before I do start, guys, just to let you know that I will be covering everything we're looking at here about the actual stock market itself, about we're going to be covering the stock market, and the and why I believe a bounce could be getting ready to start right now. We're seeing that. So that's what I'm seeing through there, guys. Silver and gold. Silver and gold. What's going on with that right now? Looks like gold is about to pick up some things as well. Why this market crash is same but different compared to the crashes that we've had in the past. I'm going to walk you through that. I'm going to share all that details with you as well. Also going to be looking at some stocks as well too, and why I see a lot of really good activity happening through there. So I'm really excited for that. Also, I'm going to talk about goal setting with your trading as well too. One of the biggest mistakes that I made when first starting, and what was the biggest thing that I did when it came to actually goal setting with your trading. So let's get straight into it, guys. Before we start, do not place a trade based on what you're seeing in this session today, because trading is risky and it can cause substantial financial loss. There is no guarantees of making a profit in the market. So take this as educational only. Also, guys, make sure you head on down to johnsfreegift.com to grab the free trading course. You can learn my #1 chart reading technique, powerful trading technique, biggest deadly mistakes, my #1 trading system that I trade, how my mentor made over $2 million or almost $2 million in one trade, and plus so much more. It's a free trading course. Go down, get it for free, get started and learn the art of you getting ahead in these markets. With that being said, guys, let's rock and roll with everything that I promised you in today's session. So let's go have a look at the stock market itself, guys, and we'll definitely be going on and having a look through there. So the first thing I do see by looking at the Dow Jones, really interesting stuff that's happening with the Dow Jones. Firstly, you can see how the Dow Jones ran down, and then we came back up and we tested this as resistance. And then we ran down, came back up, tested this as resistance all through here, and now we actually pulled back through here. So really sort of pulled back really nicely through here. So we can really see that that's what's going on right now. And the question is that right now today, we actually had a lot of bad news. Right now, today we actually had some really good, really bad numbers come out. And as you can see, the market bounced today. Now, why is that? Why is it that this day right here, bad numbers come out, market rises? Why is it this day right here, bad employment numbers come out and the market rises? Because the market has already factored in so much of the bad news. Okay, the market's already factored in that. So when we're looking at this here, these two periods through here is exactly what is exactly telling me that all the bad news that's coming out in the markets, all the bad news that's happening right now in the markets, it's happening. It's not having an effect on the markets the way most people would think, right? Most people think, oh, bad numbers come out, it's going to drop the markets, right? Today, there was more bad news that came out, and it didn't drop the markets. Why is that? Because the market has already factored in all these numbers in. So whether it's more cases with this corona, right? Whether it's more deaths, whether it's bad numbers, the market knows that there's going to be a bad number there. The market's smart. So when we're looking at this here and we're trying to factor all this in, we can see that that's what's happening right now here, okay? So what I'm looking for is that right now we've actually been holding here quite strong. We had a little gap down and now we're actually holding here. So the question I'm seeing, or I want to see, is that do we actually pause and start to rally back up above 23? Because if that happens, this could be this nice little higher low through here, right? Nice little higher low through there. And also, this could be the start of a nice move back to the upside. So really, really, really interesting stuff there, guys. What I'm seeing through there, you can see how this could be some sort of higher low. If we break up, the buyers are coming back into this market. So really, really interesting. Also, S&P 500, similar, same thing, right? Similar, same thing. We've got this sort of trend line coming down through. We're completely rejecting off that. But you can see how the market came down, found a bit of a flush down through here, which is a bit of a false breakout to the downside, rallied up, came back down. Is this going to be some form of a higher low? And if we do start to break past this high through here, then it's game on for the bulls. Game on. And then we're probably going to see this nice move back to the upside and come and fill this gap. 3,000, here we come. Or 3,000. Now that's halfway through there. Probably even a bit higher through there. On the NASDAQ actually has a bit of resistance around that 8,200 level. If I take that off the screen here, we can see the NASDAQ, right? The NASDAQ actually broke up, but it's actually been holding on the top of this trend line now. Where the NASDAQ is actually showing the strength in this market here, right? And one interesting thing I want to remind you guys is this. If I bring my screen up through to here, you can see that I have a couple of different arrows here, right? I can see we have these pink arrows here is when the World Health Organization came out and said pandemic, and then a few days later, Donald Trump came out and said national emergency. Notice how that was actually when that came out, it was pretty much getting close to the bottom. Same for the Dow Jones. And the NASDAQ, right? When that came out, it just went sideways. We're just sideways now. It looks like we're forming some form of a bottoming pattern here. So the purpose of me telling you that is that when things look really, really, really bad in the markets, we could be getting very, very close to forming some form of a bottom in the market. So that's what I'm seeing through there, guys. Really, really, really interesting and really fascinating. So the Dow Jones and the S&P 500, especially the Dow Jones, if we pause here and hold and rally back up, then we could be getting ready for another very sharp V rally out of this. And as you know, for the last month, I've been saying that I'm in these markets long, and I'm still long right now, getting ready for this V rally, sharp rally back to the markets. Now, it may not be all the way to the top. I do think that's going to happen, but at least a 60% retracement of this entire move down. And same for the transports too, right? Look at this here. Broke above it, come back down. Oh, is this going to be some form of a higher low through here? Really, really interesting. We also have the same thing for the Russell 3000. Could this be a bit of a higher low? And also the Russell 2000 as well too. Russell 2000, do we start to break up? Russell 2000 actually has a fair few gaps up here. So once again, guys, the buyers are starting to show, the market's showing a lot more strength now. The market's holding up a bit more stronger now than it has been in the past. We're seeing a bit more strength in the markets here. So yes, Miffy said, I've noticed a lot more pundits are backing away from full recession mode. You've been saying it for a while, John, but they are starting to come around. Ah, yes, exactly, right? Exactly. A lot of, and you know, Miffy, I think that's how you pronounce your name, right? You would know yourself, right? If you've been watching me for the last month or two, I've been getting hammered on YouTube saying that I have no idea what I'm talking about. And now the last sort of couple of weeks, or maybe the last sort of month, people are like, oh, well, maybe it's not too bad. Maybe the market's not going to keep dropping down. Where for the last month, I'm like, get ready for some form of a bounce. I didn't know when, but as you know when I actually went in quite big. So I appreciate that comment there. And all I know is you buy when people are really, really, really fearful. And for the last month, people have been really, really, really fearful. You can't get any worse than pandemic, you know, whole governments, everything's been shut down. Cases been happening. President comes out, says national emergency. If that's not blood on the streets, if the market, where the Dow Jones retraced pretty much 50% of the entire move from 2009 to where we are right now, if that's not blood on the streets and pandemic, I don't know what is. Everyone's panicking. Everyone's fearful. That's the time to stay rational and start to get long these markets for long term. Short term for the next 2-3 weeks, and I've always said this, I have no idea where the exact bottom is going to be, but I do know by the end of this year, oh my goodness, get ready, get ready, get ready, get ready, get ready. So, so that's what I'm seeing through there right now, guys. I'm seeing about the stock market, and is the stock market about to bounce? We're starting to see a lot of resilience in these markets here. And once again, the Dow Jones is showing that. Look how the Dow Jones is really starting to see a lot more differences through here. So I'm not saying the exact bottom is in yet. We still could get a bit more downside. But I've always said for the last month, get ready for a bottom in the markets. One, I've said over the last week, there's 3 scenarios that's going to happen, and each of those scenarios are going to equal to a rally. We either pause, break out, and rally. We either get a short-term pullback, like right now, create a high low, then rally. Or we actually get a nice drop back down towards the lows again, and then we see that rally. Either way, I see a rally out of this here. And I'm still going to stick to that. If, as you guys know, right, like for the last month, my goodness, I've been called the C word on YouTube. There's been so much hatred on YouTube towards the stuff that I've been saying. But I'm buying when most people are fearful. So let's look at that. Let's have a look at actually gold as well too, right? Gold is actually starting to pick back up. Very, very, very nice, right? Gold actually had this false breakout through here, came back up, came back down, and now we're actually having a nice little high-low breaking back up. So if we can get a very nice break up out of this here and get a very nice break above this 1600, then once that happens, I see a target of 1780, closer to 1800, coming in the works for gold. But I want to see this get a very nice back above 1640, which I believe it's going to probably start to do. We had a nice rally up. We're starting to create a high low at this long-term. Look at this here. Look at this long-term trend line here. Nice support, false breakout, found support, and now we're actually breaking back up. Really, really, really nice in the market. So we're seeing that through there. We are also, so that's what's happening through gold. Also silver as well too. Silver's also starting to rear its head back above as well too. We had a nice sideways movement, and now we're rearing its head back above. Not a very big move in silver, but this could be also a very nice move starting in silver as well too, rallying right back up towards the high up here. This here looks like it's going to be some form of a false breakout, and then a nice move back up to the upside for silver as well too. So silver's very, very hard to say right now whether it's going to be, because we could still get a very drop down from here. And so that's what we're looking at through there with silver there. So that again, guys, but I definitely do see silver forming some form of a bottom pattern through here, because we're actually starting to break up through here. So looks very strong. If I actually go to the SLV chart, yeah, there's not a lot of volume there. I'd like to see a lot of volume in today. Not a lot of volume there. If I look at the GOD, again, not a lot of volume there as well too. I don't have volume on my gold and silver chart, so that's really interesting to see. I want to see from a chart perspective that breakthrough. Now, guys, it's really interesting to see what's actually happening here, because if I look at this from a longer term perspective, let's go to the Dow Jones, and if I bring up my monthly charts here, notice this here, right? Let me actually delete this off the screen. Actually, you know what? Let me go back to here. If we go and have a look at, got to keep that vitamin C up, guys. Keep that vitamin C up. Otherwise, you'll get it, especially right now. So we can see from this bull market that we had, which pretty much really started back here in 82, right? They say this is the longest bull market in history. Really? Well, what I see is the bull market started back here in 82 and didn't finish to 82 and 92. So this happened, this went for 18, 19 years. The market went up and then it kept going up. So from here, so we had a bull market here. We had a slight bull market from there to there. But yes, we had there, but overall, right, overall, That's why I say the longest bull market history. I'm like, really? When I'm actually looking at this from this low point 82, we had a bit of a correction here in 87, as you know, and then the market continued up, and then we continued up from here to here. So that was 17, almost 18 years. What are we worried about right now? It's like, what, been, 9 years, 10 years in this expansion? Like, way that I'm looking at it is that that's nothing like, 80s into 90s. So that's an interesting thing there. But let's look at this here. So from this point through here, from this low point through here to this high point through here, we can see it came down and rallied down to 50% and then held and then rallied back up, right? Then we move it up from there to there, rallied down 60% and then held. Then, as you know, what's happened recently is we've gone through a big, massive move. So if I bring my Fibonacci from the low of the bull market to here, the low of this move to the high of this move, guess what? We have retraced pretty much 50% right down there. We retraced almost 50%. Let me actually bring up the daily chart so you can see it, right? This level through here, as you can see, this level through here is right at that 50% level there. So we have retraced pretty much almost, or pretty much 50% of this entire move up. So we have done what these other crashes have taken 1 to 2 years, sometimes more to happen. It's happened in 1 month. A 50% retracement. That's a nice retracement, guys. And then, but that's why I say same but different, right? We've had a 50% correction of this big bull market up. Now the really interesting thing is, right? The really interesting thing is that if we go back, I see people say bear markets have rallies and stuff like that. Yeah, I agree, but flash crashes like this also have very sharp most of the time have sharp snapbacks. Just like we did back in 18 as well too, right? Look at 18. 18 absolutely just fell off a cliff. 2018, as you can see, we came down and rallied almost into 20% there. Almost 20%. We were in bear market territory, but then look what happened. V rally. Now, the interesting thing about this, right, is that we had a sharp drop down. We had a rally back up. We formed this slight little high low, as you can see. A slight little higher low. And then the market continued up. Interesting. Now, look what's happening right now. Rally down, slight little high low. Are we going to start to see the rally back up? Is this just simply a repeat of what we saw in 2018? Because it's looking very, 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 now we don't know, but it's looking similar. That pattern is looking very similar to what's happening here. If we do get a higher low break past these previous highs, this is going to get back above this resistance level here, because this 22,000 is resistance where it is right now. So if we do get above this 23,000, that's going to mark two things. One, higher low breaking past previous highs is buyers in control. Buyers are coming back in. And secondly, it's getting back above this major resistance, which is a break up and out, tells me we're now likely to see a very nice move back up to 29,000, and probably by the end of this year, all-time new highs. That's gone based on what the market's telling me, guys. So really, 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 really fascinating, really interesting stuff there, guys, that I'm seeing. And same, but different. Same is like 50% retracement, like these other crashes I had, but it happened really, really quickly. But also same, like from now through to 2018, end of 2018, start of 2019. Looks like we're creating some sort of a similar, same, but different time. Yet to be seen. But watch this space, guys. Because one, if we do start to rally back above this 23,000, the bulls are back in town. And we're gonna, and the recovery is gonna be just as quick. As I've said before, The recovery is just going to be the recovery in the stock market is going to be just as quick as the move down. So if we do start to see that, I expect the next 2 months for us to be pretty much retrace most of that move down. But I want to see that breakout first, because we could continue down from here, guys, for another few weeks to wash everything out, and then we'll see what actually happens from there. So, but either way, guys, if we do continue down here for another week or two, rally's going to happen. If we break above here, strong rally is going to happen. Strong like bull, right? Strong like bull. So one thing I want to share with you guys, I want to talk to you about, is some stocks that I'm seeing right now that are setting up quite nicely. One is like Facebook. Like if I bring up Facebook, look at Facebook here. Facebook's on a long-term trend line. We have this ultimate resistance line through here on Facebook. And now we could be creating what? Now we could be creating this high low through here. And we have a gap here on Facebook, which is probably going to get filled. Oh my goodness, guys. There's so many opportunities out there. This is probably going to get filled here. Amazon is a stock, guys, that I'm just like, wow. Amazon, once again, if Amazon breaks out, I have a target of basically 2,500, 2,400 if we can get a nice breakout, which we're probably going to, right? Because we broke out, we broke down. Now we're still in this channel here. Very, very, very in this channel. If we break above this high here, we're on our way up to 2,400. Same with Netflix. NFLX, Netflix. Same with Netflix, right? If we bring up weekly chart on Netflix, weekly chart, if we start to break up in Netflix, I have a projection of 550 for Netflix. So things are looking strong like bull, guys, right? Look at this here. Same for Apple, right? Look at Apple. Apple's still in a very big bull market. We're just in a very nice pullback through here. X marks the spot here with Apple. We go to the daily chart right now. Could Apple also be forming some form of a higher low through here? Again, I don't know, guys, but look what's happening here. Something's changing this last week. Bad news is coming out and the market rallies. The tune is changing. Why? Because the market already knows this. Is this a higher low? If it is, and we start to break above this resistance line, and we start to break above this high here, break above 260, all-time new highs, here we come. At least the gap fill, here we come. It's all over the shop. The tune is changing. Right? The market's changing. Everything's starting to change. And we can, again, this is the market talking to me, guys. Not me, right? This is the market talking to me. If we do get that high low breaker past previous highs, it's the start of the recovery, and the recovery is going to be very strong. Watch it, get ready for it, because it's about to kick in the gear, right? Kick in the gear. Now we want to see that first, and then we're probably likely to start to see that, yes, it's, we're at the bottom here. So that's what I'm seeing through there, guys. But there's so many opportunities right now, guys, that this market is, because this market is very, very, very overextended. Same for like all these other markets, right? Like same for the Russell and just a lot of these other markets out there. It looks like, guys, everything's going to start to pick up. Silver and gold, especially gold. Gold is picking up nicely. Silver's about to continue picking up nicely. Stock market's going to continue picking up nicely. This is exactly what happened in 08. But it took 12 months to happen in 08 and not a month or two right now. Right? 08, what happened? The entire 2008, silver, gold, and stocks deflation. Right now, we've had a flash crash. We've had a 50% retracement, which pretty much was the exact same type of move that we had in those periods. Now they've dropped interest rates. Now they're printing a lot of money to support the markets. We're seeing things overextended. A lot of things are starting to happen here. A lot of things are starting to happen here, guys. So, you know, and it's just, there's a gift here, guys, that's coming right in front of our face. And if we can look at this from a rational point of view, guys, there's so many good things that are coming out of the woodworks from a market perspective. So that's what I wanted to share with you there, guys. What I want to do right now, guys, and no problem, I appreciate that, no problem. One thing I want to share with you is about goal setting. Okay, one of the biggest things that I see when it comes to goal setting is this. And what I'll do here for now, guys, is I'll do this. I want to talk about goal setting. Let me bring up this screen here. I want to talk about goal setting in a way of I want to talk about goal setting, guys, in a way of how you set goals with your trading. One of the worst things that I do with trading, I set these massive goals, and then I try to force it and rush it, and then I wouldn't be able to get to it. I'd struggle to get those goals. Then the worst thing I did was I actually set a trading goal, too low, and I'd actually hit it. So I went from saying I want to earn $1 million a year from trading to then blow up my trading account, to then say, you know what, if I could just earn some money, if I could just stay above break even, I'll be happy. And I did that. You know what, if I could start earning $1,000 a month, just $1,000 a month, that'd be nice. And I started doing that. And if I could earn $2,000 a month, and I started doing that. And what I started realizing very quickly was that I was limiting myself because I wasn't really stretching myself. I then said, you know what, I want to make $100,000 a year from trading. Meanwhile, right, I'm just starting to make some money, like, you know, maybe $10,000 or $20,000 a year in total. So what I did is that, okay, I want to earn $100,000 a year, even though I never did that in my entire trading career. But then what I end up doing is that the next 12 months or so after that, did I make $100,000 that year? No. But I did about $50,000 or $60,000. So even though I didn't hit my goal, I did so much better by having a higher goal. Not $1 million, but like, you know, that. Which was 100,000. Then I did 60. And once I did that, then I stretched it even more. You know what? I would love to make $200,000 a year. All right, $200,000 a year. And did I make $200,000 a year? No, but I did like 120. See how I did? But the idea of setting a big goal, guys, to stretch yourself and to go for that goal is not to hit it. Because if you hit it, you actually aim too low. The goal is to help you achieve a lot more than what you think you can actually do. So if you set a goal and you don't hit it, don't hit yourself over the head. Like me, right? The goal is about you're not, in most of your targets, you're not supposed to hit them. If you hit them, it was too low in the first place. Just like I did there, right? You know, and then I said, you know what? And then it started to grow from there. Then I'm like, you know what, man, I would love to do $500,000, $500,000 a year. That'd be awesome from trading. I'd love to do that. Man, $500,000 a year, man, I'd love to do that from trading. Did I do $500,000? No, I did 320 to 350 that year from trading. And it's just gone from there. You see what I'm saying there, guys? It's like, that's how you want to go. But it was a stepping stone. It was like, okay, I want to make $100,000 this year. I have to step back and start to take responsibility for myself and what I need to do. What do I actually need to start doing? Well, I need to start following a system. I need to start following the rules and risk management and trade management and all these things that goes into becoming a good trader. If I want to be good at this stuff, that's ultimately going to lead me to actually doing that. So I hope that makes sense with you guys, and I hope that makes sense with the way that I'm talking out there. That's the way you want to set your goals. Okay, don't be setting too big goals, like $1 million a year straight away. Now, my long-term goal, guys, has always been I want to make $3 million in one year from trading. That's always been my longer-term goal, and I've always I've always had that. I don't know why, about $3 million in 1 year from trading. I've always had that as a goal for the last 5 years. Now, have I got that? No. Am I getting closer? Yes. Every year I get closer and closer and closer and closer. New distinctions, new understandings about me, new breakthroughs. Right? And then we can continue from there. If I do want that sort of income, what do I need to start to do? Do I need to start taking a lot more trades? Is it taking a lot more trades the truth? Or is it less trades? What style of trades are going to give me the best return? And so on and so forth. And start to really number crunch that down. Before you know it, you can go from there. So that's the way you want to be setting your goals, guys, when it comes to your trading. And then just going from there. Set a goal, but then reverse engineer it back. Say, okay, what do I need to start to do if I want to start to make any progress in trading? Now, unfortunately, most traders don't make any in the markets because they just keep guessing, gambling. They keep trading, but they keep trading based on the news and not based on the facts and based on cycles. Like most people are still short right now because they think the market's going to continue going down, and it may for a short term. But the probability is we've probably found some form of bottom. We're going to start the rally soon. Very high probability. Over the next week or two, we're going to form a solid bottom before we start the rally. So, guys, if you've got any questions, please leave them in the chat box right now. And I will answer those questions for you. As I take a drink. Alrighty, guys. So, once again, if you have any questions, anything on the lookout, then put it into the chat box and I will go from there. Anything about JNUG? People love JNUG because it's the reason why people like JNUG is because it's a 3-time leverage indexed. So if I go to the day chart, wow, look at JNUG. Wow. Is this right? Is this the right chart? Is this actually really JNUG? Is this really JNUG? Is there something wrong here? This is the junior miners. But the junior miners don't look like that. This is the junior miners. This is JNUG. Is that really the chart? Let me just double check on a different source here. Because if it is, then this is probably going to be one of the ETFs that's about to blow up and go to zero. Because it's going to be a lot of those that's going to blow up. Oh my goodness, wow. Let's have a look here. JNUG. I'm just looking at a different source here right now. It is too. All right, guys. So great question you brought up through here. Something that's going to happen, and I've been telling all my private clients to stay away from, is leveraged ETFs. Leveraged ETFs, stay away from them. Do not go from them. Trade the thing. Like if you're going to trade silver, trade silver. If you're going to, like the SLV, if you're going to trade gold, trade GLD. This is something, guys, that is really evident here right now. We're seeing JNUG doing nothing like as supposed to when it comes to, because this is the junior miners, but it looks nothing like the actual junior miners ETF. What is that telling you? That's telling you that, one, firstly, we know there's a lot of leverage ETFs that's going to blow up in front of us. Secondly, that's telling me that JNUG is one of those things JNUG is one of those ETFs that's probably going to go to belly up and go to zero. And anyone that's left holding options or anything like that is probably going to be going with it as well too. And that's just not that. That's a lot of ETFs out there. I always tell my private clients, if you want to trade the S&P 500, trade the SPY. SPY QQQ, DIA, the GDX, GDXJ, SOV, the main ones like that, they're not going anywhere. Right? They're solid, but it's the leveraged ETFs, these lower ones that are getting hammered. And this is the first sign, guys. This is the first sign of that actually happening. We got a massive drop in JNUG, and now it's just gone to, now we're just where we are right now. This thing's about to get completely wiped out. This thing's about to go to zero. It's all over the shop. It's like black and white there. So if you're in JNUG, take what you can and get out of it, because now, again, I'm not going to say that because I don't know exactly what's going to happen. This thing could stop and then just go for a rally, but it's not acting in the way that the junior miners are. It's disconnecting, but it's a 3-time leverage index. The only reason why, guys, you want to trade this is because you're trying to make a lot more money a lot quicker. Haven't we always noticed, guys, that whenever we try to make money a lot quicker, we end up going backwards a lot faster? Isn't that the unco? But if we don't try to do things to make money quicker, we end up moving forward faster. Does that make sense? Isn't that weird? Whenever we try to make money fast, we end up going backwards fast. Whenever we try to put very good risk management markets, very good safer options, we're not trying to make money really, really quickly, we're patient, we end up moving forward fast. It's the unco, isn't it? Really, really, really interesting stuff. So, bear markets have rallies. You are right, but we're not in a bear market yet. We've had a big sharp drop down, but we're not making lower highs and lower lows like a bear market does. Just like 2018. So, really, really, really interesting stuff there, guys. Make sure you go down and get that free trading course too, as well, guys. Grab that free trading course. Do it now. Do it now. Let's go. John, I hear people talk a lot about national debt as a catalyst for the deep multi-year recession. I don't see it, but can you talk about this? Is this something you see? Yes. Yes, the national debt is a problem, but not now. Remember, guys, the national debt is a problem based on the serviceability of that problem. Right? That it's not, the serviceability right now is not an issue. Once the serviceability, aka they start to raise interest rates again, that's when the debt becomes an issue. Why do you think back in 2017 and 18 that when they started to raise interest rates, they got to a point where the market sold off strong. Then they dropped the interest rates and the market came back strong. Why do you think that was? Because it got to a point where it got too much for the debt, and then they had to start lowering. So the debt is an issue long term, probably the next 2 or 3 years, guys, before that happens. We're in massive debt, but if they can keep servicing it and keep paying the interest on that debt, it's not an issue yet. Once they start to raise the interest rates that they have, when they have to raise it again, then that's when it's going to be a problem. What's going to cause them to have to raise the interest rates again? Stock market goes, inflation picks up, aka stock market goes, right? Silver takes off, gold takes off, and things happen from there. So when we're looking at this and when we understand this, we can see that that's so. I hope that makes sense, Miffy. I think that's how you pronounce your name there. That's what's going to happen here. But for now, they can keep printing as much money as possible as long as the interest rates stay low. But when they have to start raising it, and then as time goes on, more healthcare, more pensions, liabilities kick in, that's when we see a problem. But not now. Not now. J-Nug, yep. I have a friend who will not touch the market out of fear, and I think they will miss out on some good bargains. Absolutely perfect, and I'm really happy that you said that, Miffy. The reason why is because when people are saying that, that's a time to buy, right? We all know this, guys. Like, if we step back and really look at this market from a logical point of view, when everyone's fearful, guess what? That's the time to buy. When was the time to buy? When was the right time to buy property market? For long-term buy and hold. 2009. Now, it did nothing for a few years, but 10 years later, guess what the property market did? It went for a nice run. Buy when other people are fearful, and be fearful when other people are greedy. Name's Mike, but I misspelled it. Oh, Mike. Oh, cool. I remember that now. Mike, come on down. Yeah, that's cool. So, Mike, firstly, about the debt issue, does that make sense? And then also, secondly, about the whole, we know the fact that the best time to get into something is when most people are fearful. And we know right now, the last month, it's been so fearful. Maybe it's starting to change a little bit right now, but you buy when there's blood on the streets. Let's actually continue here, guys. If there's any stocks or anything you want me to look at, guys, just let me know. Any questions there? Could I go through BA? Sure. So BA, this is where Boeing is right now. Yeah, I see Boeing. Let's see what I see here with Boeing. Boeing's definitely gaining a lot of strength here. So we're definitely gaining a lot of strength where we are right now. We're starting to build. There's a lot more buying activity with Boeing. Boeing's getting bailed out by the government, so I don't think they're going to go out of business. So I see Boeing racing to probably at least a 50 to 60% retracement out of this. So yeah, so I see Boeing probably racing back up towards 260. Now, if we get back above 340, then it's pretty much game on for another big move back to the upside. But that's what I see there, probably around that 260 mark. I see it rallying back up towards. Let's actually. Sell-off will start tomorrow for stock market before the weekend. Gold very hard to predict short term. Not necessarily. Not necessarily. Well, you can see how I was saying that we actually could be forming some form. If you look at gold, right? I was saying for quite some time, this actually could be some form of a false breakout. We could be getting rally for back to the move to the upside. It's exactly what actually happened. When we did rally, I did say get ready for some form of a short-term pullback, and that's exactly what that's actually happened. So when you say that, if you go back over my videos for the last week or so, you will actually be seeing that. So short-term, again, there's no guarantees. There's no 100% in that. Right, there's no 100% in anything, but the probability of what I've been saying, guys, has been pretty much 100% spot on. Even the last 2 days, the Not today, but yesterday, the drop in the stock market. I did a video saying get ready for the drop, and it actually happened the very next day. So I see, once again, if we can get it back above 1640, then I see a race back. I see a race up to the 1780 to 1800 level. So, and a sell-off tomorrow, it may happen. We actually may start to see that. You are right there. If it continues to create some sort of a higher low here, no, because the market's telling us, right? Listen to the market. It's not me, guys, right? Who cares about me? It's not me that's smart. I'm just like listening to it. Listening. And what am I doing here? It's the market is the smartest thing out there. It's not Ray Dalio. It's not anyone, right? It's the market is always the smartest one out there. The collective wisdom of the markets. Look at this here, guys. It is a fact, and if you've seen this here, that at least 80% of the time, if we identify a very strong channel and the market does break out of that channel, and then we get back into that channel and we hold, and then we start to break up, that we're likely to run to the top of the channel, which is up here. We also have major resistance coming into here as well too. If I bring up my weekly chart, this is where major resistance is on the weekly chart. So if major resistance is on that weekly charts, right there, which is a magnet to the market, which is a target for the market, and then we go back to the daily chart, it makes sense for us to run to the top of the channel, because that's what the market does. If we get a false breakout in our channel, we're likely to see a move back to the upside to the top of that channel. And then what goes in very, very, very close to that is that resistance. Guys, could you guys put me a yes in the chat box there if that what I said there makes sense about the false breakout and why I'm saying gold's likely to go there? It's not me saying that. It's just these markets. That's just how the markets work. It's patterns. 80% of the time, probably a lot more, when you do get false breakouts out of channels like this, when you do get this, it's telling you this is where it's likely to go. So it's not me guessing. It's me listening to the markets. I hope that makes sense there. And same with the Dow Jones right now. Right? Same with the Dow Jones right now. I have no idea what's going to happen, but let's look at the facts here, right? We have a major level of support down here. A major level of support down here. Once we broke that support, look at it. It's actually tested it as resistance. So it's actually testing it as resistance right now. But if the market does pull back here, like it has, and then it holds and then rallies back up, now this resistance is now going to become support again. It's a break up. Not only that, but it's now a higher low. Higher lows is buyers in control, upward trend. So not only do we have a higher low, but we're breaking back above the resistance, which you could then also say this was one big false breakout before we see a move to the upside. That's why we need to see the wait and see if that does happen. It's listening to the markets, right? The market is talking to us all the time. Sometimes idiots like me don't listen to it. We just throw our opinions at it and say, okay, this is what it's going to do. And then there's like, no wonder we get in trouble. This dumbass, me sometimes. Right? So that's the reason why I say what I say. We have a gap up here. Most gaps get filled. And so on and so forth, guys. So again, guys, I'm not saying this is definitely going to be a high low right now. So I'm not saying go buy the markets, because we could continue back down and and test a new low. Because I don't know. But if we do see this thing breaking above this 22,000, above 23,000, we have now created a higher low, breaking past previous highs, getting back above this major resistance level here, and away we go in the markets. So I hope that makes sense. It's not about me being right or wrong. It's like, okay, this is what the market's telling me. In a probability basis, we're likely to do X, Y, and Z. So if I bring up, say, for example, the gold chart, I'm sure I have a blank chart here, don't I? Where's the blank chart? There. This is gold on a blank chart. Blank candlestick chart. False breakout, back into the channel. Look, it even actually, isn't that interesting here? It found support here. Once it actually broke down, came back up, tested it as resistance, broke down, came back down. Look what's happening right now. It's even actually supporting that. Valid support. Now again, guys, this could be some form of a high low. For confirmation, I need to break above this high up here, which is that 1640 level. That's what I need for confirmation. Then I could probably see this thing racing back up to these highs up here. But I need to see confirmation first. Listen to the market, guys. Listen to the market. Meaning listen to the charts. Listening to the charts to me means just reading the markets. Because we have no idea what's going to happen, right? But there's such a very high probability based on what the market's doing and what it's doing right now. It's sort of giving you a sign of what it's likely to do. Hastings says, I want $100 a month. Okay. John, do you hold long-term stocks or are you mostly a trader with your system? It really varies, right? In times when I see a massive flash crash like right now, I load up big time on longer term positions because it's an opportunity, it's a gift. So over the next 12 months or so, that gift is just going to keep giving. Most of the positions I get into, probably some of them are not going to make money. Most will make money, and therefore I make money for the year on that. But then on the flip side, yes, I still do a lot of trades for trading my system. So when it comes to trading my system, January, February, there's a lot of good trades. Phenomenal. Me and my private clients absolutely crushed it. Right? Absolutely crushed it. But then this month, March, there's been no trades. Right? Maybe one trade. So that's basically what I do. I like to trade, but in opportunities like this. So Mike, yes, you are right. Mike just said, I rarely hear you talk about that call holding, etc. Yes, I'm doing that right now. I'm long SPY. I'm long Apple. I'm long JP Morgan. I'm long silver, our SLV. So yes, I'm long those for buy and hold basically. And I do that based on, and the reason why I'm doing it now, because it's the perfect opportunity to be doing that. Most of the time, yes, I'm only trading my system. But when a gift like this is given, I'm going to take advantage of that gift. There's blood on the streets. You better believe I'm going long with plenty of time, right? Plenty of time. I'm not trying to pick a bottom. I'm going to buy it now, and probably by the end of this year or 12 months from now is everything's going to be really, really good. I hope that makes sense. But my core income comes from my trading system throughout the year. What I mean by that is that if I'm looking for a regular income year after year after year, then I'm going to my trading system. And what that means is that some months are going to be really busy, some months are going to be very, very quiet. But if I look at it throughout the whole year and I put that together, you can do really, really well on an annual basis. You know, some people might say I make $100,000 a year from my position, but you can actually probably do that and a lot more over the year if you're very, very diligent with a good trading system. Someone said companies have already started raising capital. Yep. Companies have already started capital raising. This didn't happen for the year after the GFC. Another sign we are moving through quickly. Exactly right, Mike. Very smart, very smart. Could you go through BA? Yep. Just did that. Great analysis. Thanks, Mike. Okay. JDST as well too. JDST. JDST. Yeah, same. What is this? 3 times gold miners. Yep. Yep. And yep. This too is going to go out of business, guys. This too is going to go out of business. On the way down to zero. So if you're in positions right now on these ones here, you could be waking up to an email from your provider saying you no longer have positions because this is now gone bankrupt or whatever. You can just see the writing on the wall. Like, this is the gold miners index. But if I actually go to the GDX, it's actually building a lot of strength. Don't trade the leverage ETFs, guys, at all. They're not worth it. Trade the actual main ones, because a lot of the leverage ones are going to go bust. I actually learned that from Michael Burry, you know, the guy who initially put on The Big Short, who actually started that. Yeah, I learned that from him. Now, he didn't say that specifically. He actually just said that ETFs are the biggest bubble. When you actually dig deeper, you can just see it happening right now. It's the leverage ones. The main ones, they're good to go, because they're like SPY. That's one of the most heaviest traded ones. There's these leverage ones that just keep going down and down and down overall. Do you have a favorite gold mining stock? No, I don't, Mike. No, I don't. I do not have a favorite gold mining stock. Mike, my decisions on what I want to buy is basically based on the charts itself. So I'll give you an example. My largest position I have right now to date in collective is Apple. Right? Is Apple. To date, my largest position right now as I speak, I'm in JP Morgan, I'm in SPY, I'm in SLV, and I'm also in Apple. My largest position is in Apple. Now, why would I just tell you that? Because if I go to my weekly charts, Apple still is in a very big upward trend. And it's had a very nice pullback to support, and I'm probably likely to continue moving up from here. I don't know when. It may or may not. Right? But what I'm saying is my largest position is based on this, because the charts are telling me this is just a nice healthy pullback before we continue this move up. So I'm long Apple right now. I have been long now for about a week. What's that? Yeah, about a week or so now I've been long Apple. So the market is telling me, the charts are telling me that Apple is still in a very, 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 very dominant position here right now. Very dominant position here right now. And if we can start creating that high low, even more confidence is going to come into the markets here. Same for JP Morgan. Right, if I look at JP Morgan on an overall basis, on an overall scale basis, let's go to that weekly chart here. Firstly, we can see that this has a channel here from the low to the high point there. Channel. Okay, so I'm looking at this here. We have a long-term support line coming up through here as well too. Came right back down to the support line, bounced. It's actually been bouncing quite a fair bit. If I go to my daily charts, I can see it came up and tested as resistance. So the 95 is resistance. It broke back down. If we can hold around here and we can continue breaking back above 95, this is going to be two things. One, it's going to be a whole false breakout of this channel, which tells me that the minimum target would be 120 on JP Morgan, but then it's also created a higher low. Higher low, breaking past previous highs, which is also that resistance, is now buyers in control. Buyers in control and a false breakout, which means it broke down past support and now breaking back above it in a channel, says two things. One, if we get back above 95, the first target would be 120. If we do start breaking past 120, we measure from the high of this move down to the low of this move. We project this up, and we can see how it's pretty much all-time highs, which also goes inside of this gap here that's probably likely to be filled. Guys, can you guys put a Y in the chat box if you can see what I'm saying, that you can actually get so much from the market if we just listen to what it's doing. Now, this thing could continue down from here right now, guys, and everything I said is out the window. But if we start to break above, all these factors start to come into play about what the market is doing, and I'm just listening to it. Listening, responding, and making some good old money. Let's actually continue here with the questions, guys. Yes, it does. Would you touch Qantas as a long-term hold, John? Surely not going to fold. I don't know. Qantas, maybe. Let me see if I can. Let me see if I can actually bring that up. I don't actually have Australian stocks here. Let me just bring that chart up and see if I can. Let me bring up investing. Let me see if can I bring up Qantas? It should be. Qantas Sydney. Here we go. Let's go to the daily chart first. Actually, let's go to the weekly chart. Let's see what this big long-term weekly chart is saying. Okay, so we're definitely below there. Let me just put on a moving average here, guys. I'm going to put on a 52. The reason why I'm putting on the moving average is I want to see how far away it is from the 52. Okay, so this is the weekly. Let's go to the daily. Okay, so we're pretty far away from the 52. Yeah, same with, oh man, but Qantas is ugly, man. Don't touch this. That's the reason why Mike, I don't trade the Australian stocks anymore because, man, this is just ugly. This is such an ugly chart. We're probably going to get a bit of rise out of this and a rally back up to $5. Okay, if I can do a Fibonacci retracement, low to high. 60% is that $5 mark, $5.50 mark. There you go. So, yep, there you go. 50 to 60% retracement is likely to happen. So, yeah, I don't know. I don't really like trading the Australian stocks anymore. Well, actually, I haven't done it in a long time. Let's continue on here, guys. John, do you use any indicators? I don't most of the time. Sometimes I use an RSI and a stochastic to see if there's any strength or any weakness building into the markets. But no, most of the time I'm just looking at the charts. I'm reading the charts because The most important thing is the actual charts. Most charts are lagging indicators. They can give you a bit of sign, but they also give you a lot of misleading indication. The number one thing is to actually read the market and read the charts itself. That's the number one thing that we can do. Stuff like I've been talking about today. Appreciate your updates. Fantastic, no problem. This is not gold. It's not gold? Tell me what gold is. Please tell me. That's the actual gold price. It is. Right? It's what people go on. So tell me where I'm going wrong there if that's not gold. Look at Ripple. Also, it spiked 4,200% today before coming back down. Ripple. All right. Let's actually have a look at the cryptocurrencies here. Cryptocurrencies. Ripple. Oh, sorry. No, that's XRP. Where is Ripple? I don't think it has it on here. It's not on here. Why isn't Ripple on here? Yeah, I'm not. Let's see if I can type. Let's see if good old Google can help me out. Actually, you know what? Let's go to FinViz. FinViz may actually have it. Pretty sure they will. Wait, what am I talking about? XRP is Ripple, isn't it? What am I talking about here? Yeah, Ripple is XRP. What am I talking about here? Well, there you go. Ripple. Did Ripple spike? Did it today? 4,000%. We did spike a little bit, but the overall charts are not really telling us much through here. This thing just keeps going down. This looks like one of those leveraged ETFs actually. Just keeps going down and down and down, doesn't it? Yeah, very risky. Very risky, a lot of these cryptos, guys. Very, very risky. I have no long-term positions in crypto right now. No. Oh, not even. I have no positions in cryptos at all. Let's see if I can... But even if I go to this chart here, it doesn't show... Like it does show a spike even on this chart here. 5 minutes. Hourly chart. Yeah, that's weird. Anyway. I rarely hear you talk about... Okay, yep, that's the buy and hold. Yep, thanks for answering the questions. No problem. What's your thoughts on the FTSE 100? FTSE 100. Let me see if I can bring up... FTSE 100. Okay, the London market. All right, so my opinions always come from the chart itself. Weekly chart, absolutely been hammered, but there is a lot of support and resistance around this level through here. Let's go to the daily chart now. Where's the next support or resistance? There, through there. So let's make that thicker. I want to make that paste. So probably a bit higher. That there. Okay, so if the FTSE can create a higher low and break above the 5,800 level, then the next stop for me would be around the, what's that, around the 6,600, 6,700 level. So that's what I would say about that. Thanks for answering all that questions, John. You're an ASX legend. Thanks, Mike. Wouldn't call myself a legend. I definitely call myself a. I'm very, very, very brutally honest with myself when I'm really, really screwing things up. Instead of trying to hide it, I think that's the biggest thing for me. And plus, I study a lot. And I study the facts of what's going to help me move forward. How do I read these markets? How do I trade the markets? How do the markets really operate? What's really going on? And stuff like that. Plus, I read long term, like Ray Dalio's big debt crises and stuff like that. So I get a very big macro review. Will SILJ lead the SLV? Probably not. Based on what I'm seeing here right now, let's go actually SILJ. No, because they're different. They're different, obviously, markets, right? Silver juniors and silver are different. They're completely different markets. So if you look at the SILJ on a long-term basis, that looks completely different to the SLV. To me, what's setting up to be one of the greatest long-term bull market opportunities of our lifetime is silver. Not yet, though. Not yet. We need to see this thing continue to break up, and we need to see a bit of time fill in here around this sort of $16 level, and then a nice break above 18. Once we start to see that, 2-3 year secular bull market is coming in silver. Get ready, get ready, get ready. And because when silver catches up to gold, which we know it will, man, oh man, that's going to be exciting. You better believe I'm going to be on it as well too. I'm already part of silver now, but I'll be putting a much larger position on once I actually see that confirmation of breaking above 18. That doesn't mean the very next day or the next week. All I do know is 2 years from that point after breaking above 18, within that time frame, we're likely to see some astronomical moves. Something like, I would say, something like 2010, 2011. LUV Airlines. Again, gaining a bit of strength through here, but yeah. Probably major support down through there. Major resistance up through here. This actually looks pretty weak, actually, by the way, because we had a strong move down, a little pop up, and then another strong move down. So I don't know. We could be forming some form of bottom here, but it's not really showing any sign there. John, when you say that you don't trade Oz any stocks anymore, do you prefer the US? Yes, I do. Yes, Mike. When I first started, I traded. Man, that back in those days. Back in those days, when I was trading the ASX and I was trading options, I had to call the broker, and it was like $80 no matter what. And then as I went up, right, when I started going up in contracts, it was more. It's like $80 minimum in and $80 minimum out. You just start to trade, when you start to trade and you want to just start to get a feel for it, and you're doing like maybe $100, $200 trades, nothing like I'm doing right now, but when I first started doing $100 or $200 or $500 positions or $1,000 positions, and I'm just trying to get a feel for the markets, and they whack you with $80, and before you know it, and then suddenly you lose 50% of that position, you're like, oh shit, and then there's another brokerage to get out of it. Before you know it, you're down 70% or 60% with brokerage. It's like, man, brokerage right now is such a blessing. And it's all online. Man, it's such a blessing to trade these markets right now. I love it. Can you check out? Okay, yep, I just did, yep. Thanks for your silver market. Yep, no problem. All right, guys. Well, that is it for me today. Hope you guys enjoyed this session. Have a great day, guys, and I will speak to you soon.